Let's start our weekly market forecast, that is for 16th to 20th. First we check on sentimental analysis, where we are going to use my FX book and check on sentiments. So we are going to do a fresh one. We are doing a fresh one. So we use my FX book for sentiments. So after searching my FX book and it displays, you come to the section where we have community, and then below community you go to sentiments. Let me click on continue. So under sentiments you go to sentiments, sorry, and then you drop down below there. You're going now to see the pairs. So you see, like, the first pair we have here is GBPUSD. For GBPUSD, you can see the percentages we have is 51% and 49%. 51% is for shorts and 49% is for longs. That's now the buys and the sells, shorts. So with this kind of percentages, what I normally say is that there is high probability that we are going to experience consolidation. Um, yes, Mutua. Oh, sorry about that. I had forgotten to share my screen. I forgot to share my screen. I hope now everything is. I hope everything is now okay. So we can continue. So I was talking about these sentiments. So let's check on something like USD GPY. You can see in USD GPY, 43% of traders are on sells, while 57% are on longs. So as for me, in this case, I'll go against the majority. What I'll do, I look for sales. I look for sales with this kind of statistics. For GBP, GPY, you can see 42% are on shorts, 58% are on longs. So in this case, I look for shorts and so on. You just go and check your favorite pair. You can see, like, for USD card, shorts are 31, longs are 69. So in this case, I can look for shorts. That is now based on sentiments. That is now doing analysis based on sentiments, while we have not touched anything else in terms of analysis. I guess the screen is clear. Anyone else is not seeing my screen? Is there anyone else who is not seeing my screen? So we can continue. So let's check on gold. For AUD you can see 86% of traders are on shorts. So in this case, you can join the 14% for those who are on longs. You can join them. Yeah, that is now according to the statistics we have. But when you go to fundamentals, you can see something different. On technicals, you can see something different. But by the end of the day, you'll have came to a good conclusion. So looking on gold, that is XAUUSD, you can see we have 41% of traders are on shorts, 59% are on longs. So as for gold, with this kind of statistics and whatever the market is doing, I prefer combining everything before I make my final decision. So I don't think there's much to look on. You can check on the rest during your free time. Uh, yeah, sure. With the brokers who have been connected to TradingView, you can trade directly, but I prefer MetaTrader. So let's now check on fundamental analysis. Let's check on fundamental analysis. We have many sites where you can check fundamental analysis, but I prefer Forex Factory. I prefer Forex Factory. So maybe you can grab a notebook and a pen. I might mention a few things which might be helpful to you in terms of fundamentals. That is news. The moment you hear fundamental analysis, just know that's all about news. And what I can say is that news are very, very important. What happens is that 95% of traders mostly focus on technicals and forget about fundamentals and sentiments. And if you check on fundamentals, these are the real market movers. News are the real market movers. News will give you the market bias or the direction, and then you can now look for entries in through technicals. Yeah. So when you come to Forex Factory, you come under section where we have calendar. You click on calendar, and then now you can see news for the entire week. So tomorrow is on Monday, and checking on tomorrow, you can see we have the first one here, that is CNY, that is China. We're going to have a bank holiday, so if you trade any pair related to yuan tomorrow, you better stay away from that pair. Again, we are going to have a bank holiday in Canada. When we have bank holidays, the market tends to be very slow because there are only limited activities going on. There's no cash flow. Just take an example back in our country when we have a bank holiday or we have a national holiday. You can't do most of the activities which happen in the banks daily. That is now on the working hours, Monday to Friday, the working hours. There are those things cannot be carried out. You can only do online transactions, or you just go and do the ATM transactions. Those are the only activities you can do when we have an holiday. So the same happens outside there. So when we have a bank holiday, it's better you keep off the market. For the US, you can see we are going to have a bank holiday as well. So expect a very slow market tomorrow. And when we have bank holidays, the market tends to collect a lot of liquidity. Just observe that tomorrow, and then on Tuesday when the market opens, look what the market is doing. Now coming to Tuesday, on the pound, we have one very important news, that is now the climate count change. So if you have a notebook, you can just write a few things. If you have a notebook, you can just write a few things. We are starting with this climate count change. This is what? This is a UK economic indicator. This is an economic indicator that measures the monthly change in the number of people claiming unemployment related benefits. Outside there, when you are not employed, the government gives you some benefits. Maybe the government can pay for your health insurance, they can provide food, they provide rent. It depends with each country and so on. So people normally fill these files or forms. In the US, it happens as well. Germany, many countries do that. So here we are talking about we are in UK. That is now where we are talking about the climate count change. As you have just said, it's an economic indicator that measures the monthly change in numbers of people claiming unemployment related what benefits from now the government. And it is released by the Office of National Statistics in the UK, that is in the United Kingdom. Now if you are trading this climate cloud change, we normally focus on actual and forecast. Anything to deal with employment, our eyes are on actual and forecast. If you check here, you're going to see we have actual, forecast, and then previous. Previous is now the previous data when last we had the release. This is the data which came out. Forecast is the estimate, what analysts are trying to predict is likely to happen, and the actual now is the number which will come out after the reading, right? So if actual is greater than the forecast, what does that mean? That means there is high rate of unemployment, and if there is high rate of unemployment, just ask yourself, is this good or bad for the economy? The answer is definitely bad for an economy. So if this is bad for an economy, what will happen to the pound? The pound is likely to do what? To fall, right? And if the pound falls, the currencies against them are going to be strong. If it's US dollar is going to be strong, if it's Canadian dollar is going to be strong, you know. So the GBP pairs will intend to sell or drop. So in this case, um, in this case, previous was 17.9k, forecast this time is 22.8k. Now based on these statistics, what I can say, we can expect an actual greater than forecast. So that is on Tuesday at 10 a.m. I'll be in for a bearish GBP pairs. GBP pairs, I expect the base currency, that is the pound, to be weak. So that is it on the climate change. That will be on Tuesday. Later in the day at 4:30 p.m. we are going to have a CPI, that is in Canada. CPI month over month. is month over month, and CPI stands for Consumer Price Index. This is all about now inflation on the consumers side. We have all this, but as you all know, or majority of you know, that I don't follow up much with these other economies. I mostly focus on the US and slightly on the UK. On Wednesday, we are going to have interest rates. We're going to have interest rates decision, that is on NZD. We are going to have interest rates decision on Wednesday, that is in the New Zealand. Previous was at 2.25%. Expectation this time is 2.25%. Most of the times these banks tend to follow the trend what is happening with other banks, and as you saw that on the other day, the US they had a rate cut. So in this we have high probability of either a rate pause where it will remain at 2.25%, or we can have a rate cut which will lead it to something like 2% probably. So we have to just wait and see. And then when we have those the release for these monetary policy statements, 30 minutes after we normally have the press conference. So if you missed out on the if you did not trade the actual release, you can wait for the press conference and the trade, because the first reading will have already given you the direction. If the market sold and you have seen the outcome and you know how to interpret it, you can now be in a good position to trade the press conference. And again, while trading news, one thing I normally tell people is that don't trade news with your main account. At least have two accounts, one for trading news and then you have your main account. Like the account for trading news, let's say you want to trade news on Wednesday, you say I am willing to lose something like $50, so I'll deposit the $50 in my news account. If I lose this amount, I'm okay with it, right? We'll talk more and more on fundamentals as we move on. So on Wednesday at 10 a.m. we'll be having CPI year over year, that is on the pound. Previous was at 3.4%. Expectation this time is drop. The forecast is at 3%. I can say I also expect an actual less than previous, and if that one is to happen, that's good news for the pound. So we can expect the pound to go up. Let's continue. On Wednesday at 5:15 p.m. we are going to have sorry, not 5:15 but at 10 p.m. We are going to have FOMC meeting minutes. These are minutes, not FOMC itself. And maybe many people just always hear of FOMC and don't know what FOMC is. FOMC in full stands for Federal Open Market Committee. Federal Open Market Committee, FOMC or FOMC. Excuse. And this is now the Fed's monetary policy making decision group, right? This is now the central bank of the US. The Fed releases these minutes about 3 weeks after the FOMC. So the minutes are taken during the FOMC and then they are released later, right? Yeah. So we'll be expecting to have those minutes on Wednesday at 10 p.m. And one thing you need to know is that if the minutes shows that most of the Fed are Fed officials that are now the governors, if it's the governor for the Fed in California, Chicago, and other states, if they are worried about inflation or they are not supporting further rate cuts, as currently you know in the US, what is happening is rate cuts. You have noted rate hikes for almost, is it 2 to 3 years, something of that sort. So if most of these officials are now worried about inflation or they don't support further rate cuts, the market is likely one to expect higher interest rates. Why? Because at this date, inflation would have gone high, and when inflation is high, the Fed tends to hike the interest rates in order to curb inflation. Again, if that is to happen, the dollar index is likely to go up, and also the bonds, that is now the bond yield, is likely to go up as well. We normally have the 10-year bond yield. That one is very crucial when it comes to this technical analysis. Fundamental analysis. Again, I'm sure you have heard of this. I don't know, hawkish. You hear people say the Fed is hawkish, the Fed is dovish. So if you hear of them talk of hawkish, that means there's more concern on inflation, and if the talk is hawkish, there is high probability that we are going to have a bullish dollar index. So if the Fed is hawkish, if the Fed is hawkish, there is high probability of dollar index being bullish, and if it's dovish, the dollar index will be weak or is going to be bearish. In a dovish language, or when the Fed is dovish, that means their concern is more on growth. But when it's hawkish, their focus is more on inflation. So you need to understand those two terms, hawkish and dovish. When there is higher interest rates slows down borrowing and spending, which at the end of the day will reduce inflation, right? So that's just something little ahead to give you concerning that FOMC. So let's move forward to Thursday. On Thursday at 3:30 a.m., when majority of us will be asleep, we are going to have employment change that is in Austria. Remember, Austria is one of the largest producers of gold. If you are a gold trader and you are up at this time, uh, be cautious because these news tend to move the gold market some good pips. 50 to 100 pips move is not something to joke with in gold in a span of a minute or 5 minutes. So you need to be very careful. Yeah, so you can see previously it was at 65.2k. Expectation this time is at 20.1k. Remember, I said when you are dealing with news or anything to deal with employment, you have to check on actual and forecast. If actual is greater than forecast, expect the base currency to be strong. The base currency in this case is now the native currency, and in this case is now the Australian dollar. So if the actual comes out to something like 21,000, which is greater than 20,000, we can expect the AUD Australian dollar currency to be strong. So if you trade Australian dollar related currency pairs, be alert. Then now on Thursday we are going to have unemployment claims. That will be at 4:30 p.m. And you can see previous was at 227k, expectation this time is 229k. So maybe for most of you might not be knowing what these unemployment claims are. These are weekly US economic reports showing how many people have applied for unemployment benefits. The US government gives benefits to those who are unemployed. And I remember in the beginning of this session, I talked about that when I was explaining about the climate count on the UK, right? So I hope you understand that. So in this case, if the actual is greater than forecast, that means many people are unemployed, and if many people are filing for the benefits, government is going to be spending more on them. That is not good news for the government. That is bad. So actual greater than forecast, DXY bearish. Actual less than forecast, DXY bullish. And in this case, I expect an actual less than forecast, which will lead us to a bullish dollar index. Yeah. So we move forward. We move forward to Friday. Friday. Maybe most of you might be asking, why am I just looking on the news with this red? These are now the high impact news. The gray is bank holiday. Where we have bank holiday, we have gray. So on Friday at 2 a.m., we are going to have the governor to the New Zealand Central Bank will be giving a speech at this time. His name is Breman. Breman will be giving a speech at that time. Mostly on the speeches, I advise people to listen and get to know what is their tone. Are these people likely to do rate cuts, rate hikes, rate pause? Yeah. So at 10 a.m. we are going to have retail sales, that is on the pound. Retail sales. We are going to have again euro. In euro, we are going to have Germany flash manufacturing PMI, Germany flash service PMI. The pound again at 12:30, flash manufacturing PMI, flash service PMI again. So at 4:30 is now where we are going to be talking of the US, and that is now where I can talk something little. We are going to have advanced GDP. GDP stands for gross domestic product. So we are going to have advanced gross domestic product, that is quarter over quarter in the US. And talking of advance, this is now the first time estimate of how much a country's economy has grown or has shrunk in a quarter compared to previous quarter. Remember, we have different quarters in a year. We have the first quarter, second quarter, third quarter, and the final one. So in the first quarter, that is now the advance, which is now the first reading. It's mostly very volatile. So on Friday at this time, you might see some crazy moves in the market. So don't be surprised if you see such kind of movements. Then we normally have the second quarter, which we call it the preliminary. That is now the second estimate. Yeah. So in this case, if the GDP is negative, that shows economy is slowing down or is contracting. And when we talk of GDP, remember we include a lot of things, the imports, exports, and many other things are included in the GDP report. There's a lot which is considered there. So let's take this example. So if in the previous quarter the reading was at 2%, and now the actual comes out at something like 3% or 3.2, this shows the economy is growing faster. So if the actual is greater than previous or than forecast, that is good news for the dollar index. And based on what we have here, previous was at 4.4%, currently 2.8%. Remember, the US government has been having some 1, 2, 3 issues and so on. So for this news, you might see an actual less than previous. Actual less than previous. On Friday, I expect an actual less than previous. That is negative news for the dollar. So a bullish gold, bullish GBPUSD, Euro USD bullish, yeah. On this advanced GDP. Again, at the same time, we are going to have core PCE price index. So PCE stands for personal consumption expenditure. PCE stands for personal consumption expenditure. And when we talk of core, the word core, that means there are things which are excluded, and these are the volatile things. And in this case, what is normally excluded, even when we have core CPI, core PPI, what is normally excluded there is food and energy, because they are very volatile. Their prices can change anytime. Now, with the core, this is now where we get the real inflation. Core PCE is one of the Fed's key watches. The Fed watches core PCE closely so that they can monitor the rate of inflation. So if the actual is greater than previous, that shows inflation is accelerating or the inflation is going high. And if that one happens, the dollar index is gonna be what? The dollar index is gonna be bullish. If it's higher than forecast, shows again inflation is what? Inflation is going high. So what I will be expecting here is an actual greater than previous. So the actual might come at estimate or at forecast, which is at 0.3%, or it can come above that. So in this case, if you will be trading this news, you can expect first a buy and then a sell, buy to sell. That is my expectation. Yeah. Again, later at 5:45 p.m., we are going to have a flash manufacturing PMI. And the word flash, it's meaning a preliminary or an early estimate of what? Of business activities in the manufacturing sector. As the name suggests, manufacturing. In the manufacturing sector for the current month. Like right now we are on Feb, so we will be talking of February. And then talking of PMI, PMI in full stands for Purchasing Managers Index. And the data is released based on 85 and above surveys which are being carried out at different levels and institutions. So when it comes to this kind of reading, our focus comes on, we normally check on the readings. Is it above 50 or below 50? If the actual is above 50, that shows there is expansion or there is growth. If it's below 50, that shows there is contraction, right? So if in this case actual comes out greater than forecast, actual greater than forecast, that is good news for the dollar. And if the dollar is bullish, you know what happens to things to do with gold. They are against the dollar. Gold, the pound, and other currencies are against the dollar. The last news we are going to check on is now the flash service flash service PMI. As I've just explained to you, the word flash means fast, right? PMI stands for what? Purchasing Managers Index. And now service, you all know what are services. Like right now, I'm offering a service to you people. So yeah, so this news is released shortly before the final now PMI. They first come. So this acts as an indicator to PMI. This is an indicator. So whatever will come out here, you need to note it down. When you will be trading out the PMI itself, you will first refer to this. Excuse. Yeah. So flash service PMI measures business activities. That is now new orders, employment, prices in the service sector, and so on. So that is it on the fundamentals side for this week. We can now proceed to the technical side, technical analysis part, and then we can call it a day. Yeah. So I will be using trading view. Trading view. So I'll be checking on dollar index, GBPUSD, and then conclude with uh, gold, XAUUSD. So let's get into it. So this was our last week's analysis. If you checked on YouTube, you saw that the market tapped to our zone and it went up. So let's start with the dollar index and see. DXY dollar index, DXY, 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 the dollar index. So if you check on the dollar index, there's something I expected. I expected the market to tap up there, and then after that the market to drop to these zones here and then go up. So let's just do fresh analysis. Let me clear everything. And then we can have a fresh analysis on the dollar index. So I normally do what we call top-down analysis. Top-down analysis is where you start your analysis from the higher time frames going to the lower time frames, and in this case we are starting with the weekly time frame. So on the weekly time frame, first thing I do, I check on the market trend. So currently, if you see the market is being very bearish. You can clearly see that. So what I'll do, I'll mark the low of last week, the low of the previous week, and again I'll mark the high of the previous week. So since we are bearish, what I expect is for the market to come and give us a new low. Then before that, I can expect the market to first go up and then drop now below last week's low. But before that happens, we need to do more analysis. So what else can I see here? I can see an imbalance over here, so I'll mark it. We have an imbalance up there. Nothing else I can see on the weekly time frame, which is into my liking. So now coming to daily time frame, you can see how the market it's been behaving. The last day the market was bullish and then it pulled back and ended the week bearish. Now there's high probability in the coming week we might see this market come up to that level, then drop to this here, then from there we can go up, and by so doing the market will have given us a double bottom pattern, the W formation. That is now the double bottom. So we can expect something of this sort from the market. So I need to mark this one. I need to mark this area, which is just slightly below last week's low. So on the weekly time frame I can see something like that. Let's go to 4-hour time frame and see whether we have something different. So coming to 4-hour time frame, you will see initially we had a downtrend. Which the market broke out from, and then after breaking out the market, we had this first top, second top. You can see we have a double top. Then what is happening currently, and when you check here, you can clearly see we have this kind of a head and shoulders pattern. So let's wait and see how the week starts. Now before the previous week ended, you can see clearly how the market was doing over here. The market respected this imbalance. It tapped and then dropped, leaving a lot of liquidity over here. So it might be coming back for that. It might be coming back to grab the liquidity. That means it will slightly go above and then we can now come down. That is my take according to H4. And also coming to 1-hour time frame, I can't see anything much. So yeah, that's my take on the dollar index. But first we wait for the market to open and see what happens, because we don't know what has happened over the weekend. The market might open below here to sweep all this liquidity, come to this area here, then go up and then drop again. But tomorrow, before London open, we will have already known what was happening. And don't forget that we have said tomorrow we have a bank holiday in the US. So if you are going to be in the markets, you need to be extra careful, or you need to be very patient, because the markets will be very, very slow. So that's my take on the dollar index. I don't know if you have anyone with a different view on that, anyone with a different view on the dollar index. I don't know if there is any, and if there is none, we can check on the pound GBPUSD. Currently I don't trade the pair. I normally trade gold alone. But we can check on the pair. So this is the analysis I had in the previous week. I expected the market to come up to this level, then drop. So you can give it a quick look. So now coming to this pair, that is now GBPUSD. You can see the pair has been very bullish in the recent weeks. So let me see this. You can see a message there. Can you give tips on how you trade, like when you're starting to trade? Okay. Mike, I'll be doing sessions for those who are not familiar with all this technical analysis stuff and also from the basics. So don't worry about that. So I have marked the high of last week. I've also marked the low. Again, you can see the market is moving up. So what I can do, I can mark the recent highest high. This is it. I can mark that. It is going to act as a point of interest to me. So that is what I can clearly see on weekly time frame. So after that, I can drop to daily time frame. I can come to daily time frame, and you can see where we had the turning of this market. It was a very strong level. It was a very strong level. For those who have been with us for long, remember I told you about the market phases, or how the market moves in an impassive move, which is a strong move. Then after every strong move, you will see the market tend to do a correction. Impasse, which is the strong move towards one direction. Correction, this is an impasse. The market has been correcting, so we can now expect an impasse. And if you are looking to trade, always look for an entry when the market is in a correction phase, not when the market is in impassive phase. When the market is strongly moving, don't look for entries. You're going to get fucked up. So that is it on the weekly time frame. Looking on daily time frame, I can't see anything important here on daily time frame, because you can see where the market turned from. It was from a daily time frame imbalance. The market just tapped and then the reversal began. Now coming to 4-hour time frame, let's come to 4-hour time frame. Coming to 4-hour time frame, just check on what happened previously. The market was in this downtrend. The market was in this downtrend. You can clearly see that. And then afterwards, the market broke out. So when we'll be looking about what we call it, can't remember the name, but you can see this is what the market has been doing. The characteristics of a downtrend, we have lower highs and lower lows. So what happened here? The market broke the lower high and it gave us a new high, then came down for a new now lower high. So that means the trend is changing here. So we expect the market to go up. That is now what we can see there. Again, when you look on chart patterns, when you are very keen with chart patterns, you can see the market is trying to give an inverted head and shoulders pattern. So in this case, I can expect the market to buy up to this 20%. I can expect the market to go up, but before then, let's check on 1 hour and see where we can possibly have some entries. Let's check on 1 hour and see where we can possibly have our entries. So in this case, coming to 1 hour, time frame, you can clearly see we had a trend over here as well. You can as well move the trend line to that. It's still okay. If you use the previous points, still okay. No problem with that. so you can just use any. So according to what we have currently, I can expect the market to give a drop back to this lobby or order block over here, and then we can now start going up. And also by doing so, when you check on this daily 1 hour time frame keenly, you will see that the market will have also given us an inverted head and shoulders. This will be a shoulder over here, whatever is below it will be an head, and then whatever the market will be forming here will now be the right shoulder, and then we can go up. I believe you can understand that. So that is my take on the pound. I expect the market to come down and then go up. Remember, on the dollar index we expected it to go up and then come down. What happens is that when the dollar index is bullish, pairs like the pound, they intend to go against the dollar index. So I hope with that logic you can now understand. So I can expect something of this sort to happen. So tomorrow, as we will be having a bank holiday, the market can consolidate coming down. Then on Tuesday we can have our longs. Now let me conclude with gold, XAUUSD. This is what I like. Gold is the easiest thing to trade, and also the one which can take you home very fast. So like what we had last week, it's on our YouTube channel. If you checked, you will see that the analysis there. So for those who followed up the analysis, you got a sniper entry there which gave you 1583 pips. For those who are in the groups also, I shared setups. Each and every day I was sharing setups in the same. I believe you took advantage of that. So let's start this analysis with monthly time frame. Let's start from monthly time frame. Now, gold analysis is quite different from other pairs. Gold analysis is different from other pairs. First, when we check on this, you can see the market has been very bullish for a very long time. You can see gold has been very bullish. Gold has been very bullish for a very long time. So now on the monthly time frame, you can see gold has been very bullish for a very long time. Maybe for those who have been following me for quite a while, we had our first gold was around this area, but that time I was still planning. That is when I just joined the industry. So yeah. Now what we'll do first, we mark the highest high, the highest level where the market has gone to. That is the highest high. We mark that. The other one we can do here on monthly time frame. You can see the current month market first dropped and then pulled back. The current market is now bullish. So I can mark this high of last month but one. I can now, with this, now I have the playground. I have the playground with that. Now let me come to weekly time frame. Now coming to weekly time frame, you can see something very interesting. First, we have this where the market bounced back from after that sharp drop. Market reversed from this strong demand where we had another block. So the market respected there. You can see currently the market is very bullish. The market is going up, yes. Then this long wick over here, it's a very strong liquidity which can act as a resistance. It's very strong. So I love a point here at the 50%. That's around at let's say 5300 to 5320. I'll be watching that level keenly this coming week. This is going to be a point of interest for me. That's on weekly time frame. I'll not mark about the high and the low for gold. Gold needs some different approaches and so on. Now coming to daily time frame, you can see in the previous week, Friday the market was bullish, Thursday bearish, Wednesday bullish, Tuesday bearish. It was kind of a balance. Today is bullish, tomorrow is bearish, and so on. So if you go to lower time frames, you will see the market was kind of consolidating, but the trend is still very bullish. You can see the market is still very bullish. After I brought this trend line over here, you can see we have two touches on the upper side. We have two touches on the upper side, and if the market is to go up, grab liquidity here and give us a that touch, we are probably going to be at 5900 to 6000. But in this case, with this kind of market, I can target the 6000 level if the market is to continue now going up. Again, the other one here, if you check on it, is it the market is giving us an expanding channel. The market is giving an expanding channel. Then you can see the market here had a very sharp drop, and then we have a consolidation. So we have to keep this in mind. This consolidation might act as a flag, and the market will give us another strong drop. So we need to be very keen when we are still trading those buys, as we can see. Now let's come to 4-hour time frame. Let's come to 4-hour time frame and try to reason together. Now this is where the market has been playing in. That is the previous week. But the market has been going up, down, up, down, up, down. This one. That means we have a lot of liquidity up here to be cleared. That is now currently where the market is approaching. And again, here we have liquidity. So, according to me, what I can highly expect is for this market. I don't know how tomorrow market will open. It might happen with a gap, and anything can happen with the market open. So maybe the market can drop back to somewhere here and then go up to the point of interest I had there, come down, and then we can go up. We can go up, or the market can just open and continue going up. The market can just open and keep on buying. The market can open and keep on buying to our level here. And also we have another block just slightly above our point of interest actually. So with that, we can have our focus now on this. So the around 5380 to 5400, if we are to take any sales, will come from that level. Then from there we will know what to do next. So we'll have to wait and see what this market is doing. The market on gold has been very crazy. For those who have been trading small accounts, you can bear me witness what we have seen. And I'm sure if you have been into the market and very observant, during the Asian session, you have seen what the market has been doing. In most cases, you have seen last week the market had started. Here we had consolidation. Consolidation. The market has started settling actually, so that is not much of a concern. So let's wait and see what happens. Let's wait and see what happens. This is 15 minutes. So with the 15 minutes, the market might come back to this and then go up. But how the market opens will say a lot. How the market opens will say a lot. It might come back to this and then will go up, or it opens and goes up without coming back. So guys, that is it from me for today's session. If you have any question, kindly you can unmute your mic, ask your question, and then we can call it a day. Yeah, our friend here is giving out something very important. This is good from that 900. That patience. Yeah, sure. There might be a gap in the market, and also tomorrow, since we are going to have an holiday on Tuesday, the market will be making some crazy moves. When the market opens with a gap to the upside, we buy. When the market opens with a gap to the downside, we sell. When the market opens, can I wait till I see trend or I start? Be patient, my friend. Don't just jump into the market. You need to have an edge. UK oil, US oil. Commodity. Let me check on something I want to show you. Shit, I did not take this one, and these are very nice. 66.59 per barrel. Anyway, it's okay. We can't take every trade. So I'm looking for something. I'm looking for something in the charts. So this is what we are talking about when we talk of gap opening. The market opens and there is this space. This is now what we are talking about when we talk of a gap. This one, right? So this means the market opened on the upper side. So if the market opened here, you just had to look for a sell entry, and you can see how the market dropped. You can clearly see that. So that is the point Mikael is talking about here, if I'm not wrong. When the market opens with a gap to the upside, we buy. When the market opens with a gap to the downside, we sell. On this statement, I don't agree with you, but everyone has a different approach. Everyone has a different approach on that, and also it will depend on what time will you be trading. Is it during the Asian session when the market has opened, or is it later in the London or New York session? So if it's the Asian session, you are very correct. But if it's now London and New York, the market will be trying to come and fill that gap. So you do like I was just showing here. Yeah, so I don't think we have anything else to do. We can just call it a day. For those who are trading mafura, for those who are trading oil, I expect the market to continue going up. The market has had this initially. Some things don't need deep analysis, you just need something little. Then when you look here, you can see we have had a very strong zone here. So now I can expect the market to go up on crude oil, crude oil, crude oil, crude oil. I can expect a buy. I can expect a buy on crude oil. Can expect a buy on that. Yep. Things are crazy over here. Things are crazy over here, guys. So for Bitcoin, I've had the Bitcoin buy since 2024. On January 2024, we had this trade. Initially, before that, we had in 2023 we had these sales which played out very well. Yeah, if you have been following me for that, I'm sure you saw this. So after the market drops, and so on, so we can expect the market to start going up, and when the market will start going up, you can expect it to land around 15 million per Bitcoin in Kenya shillings. No, sorry, not 15 but 20 here. And you can see on monthly time frame we have had a very strong demand here. The market is trying to now give a pullback, so I can expect Bitcoin to be now ready to go up. I expect Bitcoin to be doing something.
Mzee, hii Bitcoin naona bado inashuka bana.
Yeah, sure, itashuka shuka
Hadi 50k.
50k sidhani.
Target ni 50. Uko sure?
According to but wacha tuone mali itaenda tu.
Okay, na hii UJ
Unless I do a fresh analysis ya Bitcoin. Let me just do a quick analysis ya Bitcoin juu itakangi mambo mingi.
na pia UJ.
So it's just still the same thing, Yeah. So this current zone is going to determine a lot. The current zone on Bitcoin is going to determine a lot. USD, JPY. I guess the pair is bearish. Let's check. So now looking at this pair, you can see the current month is bearish. The previous month the market was bearish as well. So let me mark the high of the previous month, and since currently the market is bearish and is almost taking out the low of last month, I'll not mark the low. What I'll do, I'll go to the next point of interest, which is now this fair value gap over here. Fair value gap over there is going to be my point of interest. So that is it on monthly. Let me check on weekly. On weekly, you can see last week the market was very bearish. Below here, where we have an imbalance, we have an order block here for weekly. So you can have something like that. Again, when you check on the market trend, you can see clearly the market is in an uptrend. If I draw my trend lines, remember we normally use trend lines to show direction. On the support, the market has given us 2 touches, so there's a probability the market is going to be giving us now the 3rd touch here, and then just go past that to grab liquidity, come to that, and then we can go up to around 64. 64.3 before we take long sales. Yes.
62.
Uh-huh. Okay. As for me,
62.
okay. Let's say above 60.
Yeah.
So that is what I can see from the weekly time frame. Let's see daily. If you have a small account, this is one of the pairs you can trade comfortably. So you can see we also had a gap in last week. We had a gap here. The market opened down. The market we had this gap here. The market opened down here and then it went up to fill the gap. After filling the gap, market respected this fair value gap over here and then it dropped massively. We have a gap here. We have a gap here. So I expect this market to keep on selling to this zone actually. Then by so doing we will have this kind of a double bottom pattern actually. So I expect sales in the opening of this week on USD JPY. I expect the market to keep on selling. And if the market is to come to this level, that's 500 pips. That's 500 pips. That's a good number. 500 pips. Remember, this is daily time frame actually. That is daily time frame. That's daily time frame. So I can expect sales, then we'll go for buys later. I don't know what was your take on the same. Hello. Hello.
Umepotelea wapi?
Net ilikuwa imenini.
Oh.